be with you tonight and able to bring you this next webinar in our series. And tonight really focusing on that crucial step of going from a one-time property investor into a property portfolio builder. Now, before we get into the webinar, as always, there's a bit of housekeeping to go through. So we'll try and keep the webinar tonight to about 45 minutes. Please feel free to ask some questions. You'll see in the top right-hand side of your screen, there's a little box where you can write questions. At the end, I'm sure we'll have a time to answer a few of them. If we don't get to your question tonight, we'll definitely be reaching out in the coming days and able to answer those questions directly for you. Also in the coming days, we'll be getting in touch to talk about some of the next steps. So hopefully you find the information tonight really useful and keen to sort of explore further how to continue to build a property portfolio. So we'll be reaching out by text, by email, and also in some cases by phone, and hoping to have some conversations and start you on the right path. As always, we have a bit of a disclaimer for the webinar. So any information shared today is intended to be general in nature. So before you make any decisions, definitely decide whether it suits your personal situation and seek professional advice where appropriate as well. Now, most of you will know Future Assist has been helping clients build wealth through property for 17 years. Look, we're a pretty small company, but always trying to improve our processes. And this has really led to our boutique approach to building wealth through property. What we tend to find is that without expert help, many investors do stop at just the one property. And so the purpose of the webinar tonight, and also for working with our team longer term, is to learn how to take that next step in becoming a portfolio builder. Now, real wealth in property investment does come from growing beyond that first investment property. We often find clients will go out and buy maybe one property, and they might do everything correct with that. They get a good property, they hold it for 10 or 15 years, and probably the result they'll get out of that is they might make several $100,000 and use those funds to, let's say, pay off their mortgage, something like that. So a very worthwhile thing and get a good outcome from it. Now, of course, if they were able to do that maybe 2 or 3 or 4 times, suddenly the gains become much greater. So they have an opportunity to not just pay off their home, but also to maybe generate passive income. Maybe they can now achieve their retirement goals, or perhaps it's just about developing substantial wealth that they can use for their own financial freedom. So I guess the question is, why doesn't everybody do it? So we find there's some common sticking points that people often come across. So the first of these is sometimes just the fear of taking on more debt, or sometimes that finance is just going to be too complicated to make this happen. Another big one is uncertainty people have about the timing of investing or about general market conditions. So what we tend to find with this is that people will think about, is it the right time to invest or is it not the right time to invest? Problem is often that when the market actually starts to move, if you haven't made those investments, it's too late to actually get in at that point. So there's plenty of situations over the last 10 years where perhaps people have made an investment. It might not have moved for 4, 5, 6, 7 years. And then suddenly in the last 2 or 3 years, they've had huge amounts of growth out of it. So people that have been able to make those investments when they're able to have then been able to build this portfolio. And when the property prices actually move, their portfolio grows dramatically at the same time. And sometimes, of course, it's just a question of feeling comfortable. Sometimes we just feel comfortable having the one property and think we're doing the right thing by investing just the once. So I'll now hand you over to our expert speakers. So I'm joined tonight by 3 of my colleagues. So first up, you'll hear from Danny Thalji, our head of wealth strategy. So Danny and his team, they really strategize around the how to create these property portfolios. Then we'll hear from Keith Bensley, our group director and head of the investment committee. So Keith and his team are really responsible for finding that the stock or the actual investment properties that go towards adding to the actual strategy and making them real in terms of the actual investment. And finally, hear from Simone Karkik, our finance team leader, And as always, finance such a crucial part, and particularly when we're looking to really structure your finances correctly to be able to build a portfolio. That's where Simone and her team really come in. So to get us underway, I'll introduce you over to Danny. So welcome, Danny, and over to you.
Thank you, Sean. Okay, so good evening, everyone. Maybe good afternoon for some, depending which part of Australia you're at. Fantastic to see some familiar names join us this evening. And for those that I haven't personally worked with, my name is Danny. I'm based out of our Sydney office, and I head up the Wealth Strategy Department. I've been with Future Assist for coming on to 13 years now. And what a time it's been for anyone who's purchased property during this time, myself included. We've seen interest rates fluctuate, the country shut down during the pandemic, immigration soaring, government policies and incentives getting thrown around, and builders really struggling to keep up with demand. And despite all of this, property prices can continue to skyrocket. The reason I imagine most of you are here, I guess, is to see how you may be able to unlock your financial potential and take yourself from being a single property investor to a multi-property portfolio builder. But before we talk about the how, let's just maybe quickly dive into the why. Accelerated wealth creation is probably one of the main reasons. So, of course, property has the means to grow your retirement asset base at a pretty fast rate. To expand on this, let's ask ourselves, how long will it take the average Australian to save $100,000? So if we were to set up a bank account, contribute, say, $1,000 from your salary each month and compound it at interest 3%, at a 3% interest rate. So you'll achieve this milestone in just short of 8 years. Now, if you're to hold a property portfolio, this could add $100,000 to your equity position in less than 12 months. And we've seen this happen time and time again. Faster means to pay off your mortgage. So paying off the debt on the family home is something that we all aspire to achieve. But how long does it take the average Australian to pay off their mortgage? Varying from state to state, if we were to take the average Australian household mortgage of roughly 700 grand, the loan will be paid off in 25 to 30 years. Now, if we were to contribute an extra $1,000 per month for the duration of the loan, this could be reduced to just under 20 years to have it paid off. This, of course, assumes current interest rates and doesn't take into account any further loan increases, which I commonly see, things like renovations or purchasing vehicles or boats, caravans, etc. This will obviously push that time frame back out further. On the contrary, if you were to purchase another investment property for, say, 800,000, which has the potential to double in value over the next 10 years, there's an extra $800,000 of equity. And using that, you could potentially be paying off your mortgage and being debt free on your home in half the time as the conventional methods would suggest. A few other reasons why, I guess, maximizing your tax deduction. So we all love a good tax refund at the end of the financial year, but in reality, there are really only two fundamental ways to achieve this. Contributing more into your super, or purchasing an investment property. And when you purchase a brand new investment property, you can unlock further tax deductions through the added depreciation of the build. This, of course, does diminish over time. So the best way we tackle this is to re-inject further deductions through continuation of investing. Sean will take you through a case study shortly, which will further detail this scenario. Diversification. So it's important to continue to expand your portfolio across different markets to help mitigate risk. A common question I used to get, not so much now, is now the right time to invest? My answer was and always will be yes. We can sometimes forget that Australia is in fact made up of hundreds, if not thousands, of different property pockets, which means that at any given point in time, there is always somewhere that meets the criteria and substantiates the right time to be investing. Utilizing leverage to unlock further opportunities. So the use of leverage provides the potential to amplify returns on investing by using borrowed money to control a larger asset base. This is the benefit of holding a portfolio, as you can have access to more equity and be in positions to reinvest sooner as your portfolio actually grows. Passive income for retirement. So depending from which source you get your data from, but it's widely noted that less than 1/3 of Australians will actually have enough in their super to live a comfortable retirement. So a property portfolio outside of super can help bridge this gap and avoid relying on the age pension. Just to satisfy my own curiosity, I jumped on the Services Australia site earlier today and saw that the current annual age pension in Australia is approximately $30,646 for a single person and $46,202 combined for a couple. So out of the hundreds of household budgets I've reviewed over the years, I don't remember ever seeing one that could possibly cover these sort of figures. So where to now? So with rates pulling back, seen them drop a few times this year, rentals increasing, prices continuing to increase. Let's now run through a checklist of how our team of experts might be able to help you unlock your next purchase. So reviewing your budgets. I can't stress this enough, but budgeting is the cornerstone of any successful property portfolio. And from my personal experience, those that are more in tune with their financial position are the ones that find themselves in stronger positions to genuinely expand. Our wealth strategists, that's my team. So they can provide a number of tools to assist with drawing up or updating a budget that you might have done in the past. And we use this as a measure of demonstrating affordability. Knowing how much you can commit towards an investment on a monthly or even yearly basis, that's really the first step and an internal milestone we genuinely want to tick off just to make sure that moving forward, we're taking that next step with confidence. Calculating your deposits and assessing your serviceability, really important. Assuming you've purchased property in the last 10 years, you would have built some form of equity. In most cases, we'll help you tap into this equity to cover the initial deposits and costs required to purchase your next property. When I refer to costs, we're talking about stamp duties, conveyancing, legal fees, finance fees, etc. Now, our strategic approach is to map out a pathway for the banks to lend us the full amount and ultimately maximizing your tax deductibility, knowing that the interest on the investments is in fact tax deductible. In some cases, though, depending on individual circumstances, a restructuring of your loan or maybe an injection of savings, maybe a cancelling of a credit card, or even a consolidation of debt might be required just to get us over the line. But we do lean on our team of finance specialists to help us squeeze as much borrowing capacity as possible to keep the use of savings to the minimum. Now, I know Simone will be touching on this a little bit later and cover off on a few more details around sort of the finance side of things. Last point here is just determining a strategic price point and taking swift action, because again, what you can borrow is not always what you should be borrowing. So once our team can help you show a budget surplus, confirm your borrowing capacity, then we can guide you on what purchase price we should target to set ourselves up for the best chance of success.
I'll jump in and out.
We carry the heavy lifting and lean on our investment criteria and the intellectual property of our direct property investment committee to help us. Not only do they have access to pieces of real estate that others don't, but they do continue to unlock new opportunities in new markets that are growing, really creating strong value for our clients. The most recent example I could think of was just last week, actually. We were able to help one of our clients secure their actual 5th property with us, and they managed to do so 2 days before the land price was actually set to increase by $10,000. So they were extremely happy with the outcome. and they wouldn't have been able to do it and take advantage of that opportunity if they hadn't been highly engaged and if they didn't have the support from our team of specialists, everyone all pulling on the same rope. So if there was ever a more opportune time to get back in the market, it's now. Demand's never looked so strong, but as a result, supply for the investor market has never been so limited. Keith will touch on that in a sec, but with the right level of motivation, coupled with the right team behind you, hoping to see if we can take that next step and help you guys from becoming an investor and turning that into a real genuine portfolio builder. So on that note, I'd love to pass you on to Keith to go through a little bit more on the property front.
Thank you, Denny. Appreciate the introduction. Everybody, I'm Keith Bensley. I joined the Future Assist Group back in 2012. My background was in accounting, and during my time with the group, I've acted in positions of the Group General Manager, Group CEO, and that was for the period 2012 to 2023. So today I serve as a Group Director, where I hold multiple directorships and licensing positions throughout the group. On a day-to-day basis, I'm heavily involved in our continual drive for improvements with our client offerings, and I have a very active role with our real estate offering. So this afternoon, I'll be covering off on our Direct Property Investment Committee, our unique approach to sourcing property opportunities, benefits our clients gain from accessing our intellectual property, our continued drive for seeing our clients achieve great outcomes from property portfolio building. So in terms of a Direct Property Investment Committee, to the best of my knowledge, adopting an investment committee for use of the asset class of direct property is unique to the Future Assist business. I personally chair and helped establish this governance structure back in 2019 after seeing the success and consistent outcomes of using this structure in our financial services entities for other asset classes, especially direct equity and fixed income portfolios. In short, its main role is to ensure that investment decisions are sound, compliant, strategic, and aligned with the risk and return objectives. With respect to sourcing right properties at the right time, it's common knowledge that the entry point of getting into any investment is very important. With direct property and especially land opportunities, getting in early stages of a new estate, particularly in a growth corridor, is absolutely ideal. I've used a couple of real images here, and at the top right, and I'll give you the backstory, was that when the borders finally unlocked after the pandemic, I personally got on a plane with our licensee, left Brisbane and went straight to Perth. Once Perth being the last state to reopen allowed us to. Our suspicions were confirmed when we arrived that despite the East Coast absolutely booming, Western Australia was counter-cyclical. So on the northern tip of Perth, we secured exclusive allocations, which are in that image, for our clients, and it was title land ready to build on. This is now fully built out with large upside for owners and rental returns and capital appreciation. On the bottom right image, and again, a first stage of a coastal community north of the Sunshine Coast in Queensland, we have helped our first batch of clients, secure homes, and they're now approaching handovers. And land prices in the states just about to be released are over $50,000 more per block alone than our clients' entry points. The rental market is incredibly tight, so this is another case of accelerated capital growth and future rental yield uplift. So as a recap, our unemotional and factual approach has and continues to provide good outcomes to our clients, particularly those building property portfolios. Now, as we go over to the other slide, we're going to be just touching on government housing policy. So we're not here today to get into political views or perhaps allegiances to parties, for instance, but I am going to note the hard fact that is that the current and past governments have failed with their housing strategy in Australia, particularly combined with our net immigration inflows. So the current policies are continuing to have the exact opposite effect of what leaders and politicians are hoping to achieve. So words that we all hear in media, such as affordable housing and fast-tracked housing stock, they're just catchphrases. Further to shortages, there are significant problems with future land delivery due to infrastructure issues. Now, some examples which we've encountered include that no new land can be delivered at present in the Northern Adelaide corridor, as sewerage is not connected to the main system. This means that there are pump stations where trucks are manually transporting sewerage. A similar story is being seen in growth corridors in Greater Brisbane, with water not being connected to new land estates many months after land is complete. Our current challenge in our business is sourcing appropriate investments for our clients. And fortunately, we can lean on our long-standing relationships in intellectual property. On that note, our business has developed strong relationships and built intellectual property, working with a range of long-standing land partners and build partners. This ranges from small mum and dad operations right through to listed companies. From a land perspective, nearly all land is currently sourced off market, especially for investor allocations. If you were to walk into a land sales office in most states in Australia today and attempt to purchase a block of land, I would highly suspect that there is either nothing currently available. If it is, it's going to be titled in months or possibly over a year ahead, or they're only selling to owner occupiers, probably being the most common response we hear. From a build perspective, working with builders who construct a high standard and have a timely build delivery is crucial and difficult to find. So again, we lean on long-standing relationships to help our clients access proven and quality operations. This part of our intellectual property is that the last part of our intellectual property is that we also access ongoing data through our existing client property revaluation process. So for our clients, and there may be some here tonight who use our accounting practices for self-managed superannuation entities, they need to revalue that asset on an annual basis. As a result of our business helping with this task, it gives us real-time insights into movements. I'm going to give an example. Some of our clients had purchased homes in the state of Tasmania over the years, and what we saw was a bit of a dip, a correction in that 2023 to 2024 era. But then we were able to pinpoint, when that's markets came off and when the recovery was taking place mid last year. So that has helped us make some informed decisions where we may potentially go next. It's worth noting that our business is licensed and can access, real estate for our clients in all states in Australia, with the exception of the Northern Territory and the ACT. I know Denny talked about diversification as an important part to investing, and our business is positioned to serve on that front. Now, as an example of our clients benefiting from intellectual property and goodwill, I'm going to refer you to the bottom image of 8 terrace homes below. Now, the background to these was that the land was entirely off market. It was through a trusted land partner and was located in a very desirable location in the Brisbane to Sunshine Coast corridor. And in addition, a trusted local builder had to be sourced who could deliver a row of terraces in a very timely time frame to a high standard that met the covenants of that estate, and an incredible outcome was achieved for the owners. So these were built within 9 months, unheard of, particularly in 2023 for double-story construction, and there's been great capital appreciation in this particular case. So I trust I've given you further insight into our end-to-end solution. I just want to personally, thank you for your attendance and support as clients of the Future Assist business over the years, and hope provided some value tonight or this afternoon, depending where you're located. I'm going to hand you to my colleague, Simone Karkeek.
Thanks very much, Keith. Hi, everyone. Thanks for your time tonight. As mentioned, my name is Simone Karkeek, and my current role is to oversee our team of home lending specialists and our finance support staff across all of our offices. I've been a part of the Future Assist home loans team for 15 years, so I'm sure if we have existing clients here with us tonight that have finance with Future Assist home loans, we may have already been acquainted at some point throughout your process. The finance team work very closely with the strategy team, as well as our expert property team and other areas of the business to allow the best outcomes when it comes to building our investment portfolios for our clients. As part of the overall finance process, there is multiple ways we go about ensuring the best outcomes in terms of structuring their loans to allow growth within their portfolios. These consist of reviewing a client's borrowing capacity. Before any client is presented with a property-based wealth strategy, our finance team has already had the opportunity to review their financial situation to make sure that it's suitable. The most important factors that we need to incorporate when reviewing borrowing capacities are the following. Income assessment. This is where we evaluate all sources of income. So, for example, your salary, any bonuses, rental income that may already be received, etc. Expense review. We are required to look at regular living expenses and all other financial commitments, such as loans and liabilities that may be held, credit cards, and also we look at dependents as well. Your credit history. Checking credit scores and ensuring that existing debts are reliable and that there's been no past discrepancies. Asset and liability checks. So reviewing owned assets. So any properties, savings, investment, as well as any liabilities connected to those assets also. And lastly, lending criteria. So comparing different lenders' policies, their interest rates, their servicing calculators, we all take this into account. So we look at the best outcome for the client's individual situations. Loan structuring to support property growth. Smart loan structuring is key for clients wanting to build a property portfolio over time. We help set up loans to support future growth by focusing on the following main factors. So maximizing your borrowing power, making sure we structure loans to optimize serviceability, such as using interest-only periods where it's applicable, or splitting loans across different lenders to reduce exposure. Using offsets and redraw. So encouraging the use of offset accounts and redraws, which then help to reduce interest while keeping funds accessible for any future deposits and for future investment costs. Separating investment and owner-occupied debt. So keeping these loans separate with loan splits and also helping to ensure that we look at maximizing your tax efficiency with clarity. So having separate loan splits in terms of investment and owner occupied helps to do this. It also makes tracking your investment performance easier also. Accessing equity. Setting up loans to allow future equity releases. So again, this could be done through separate loan splits when the equity is available. And this helps fund future deposits without having to sell assets also. And avoiding cross securitization. So, where possible, avoiding cross securitizing properties allows more flexibility when refinancing or needing to sell certain properties, and it helps reduce lender control over the client's overall assets. And planning ahead, we look to consider the client's long-term goals, such as buying again in possibly 1 to 3 years' time. We help structure the loans today so that it won't limit what the future opportunities are within that time period. Having our own products offering more flexible solutions. So having access to both broker products and as our main business being a mortgage manager, we can offer the best of both worlds. Access to a range of lenders. So, like any broker, we compare loans from multiple banks and lenders to find the right fit for you if your personal situation requires this. Our own lending products. So, as a mortgage manager, We have our own branded loan products, giving you a more tailored, competitive, and flexible solution. Again, greater flexibility. As mortgage managers, we're not locked into the more of the strict bank policies. So some of our lending solutions can be structured more creative to suit your needs, including clients that may be self-employed or have some complex income, or even clients that have long-term investment strategies. And finally, end-to-end support. So we manage your loan from application through to settlement and beyond. So you deal with the same team throughout the life of your loan when you're with Future Assist. So in short, more choice, more control, and more flexibility designed around your situation and your circumstances. Specialist guidance to help clients feel confident about expanding and working with the strategist as well. So expanding your property portfolio or making big financial decisions can be very overwhelming, but having access to all our teams does make it simpler for clients to be able to do that. The finance team work closely with our strategists and property team to provide specialist guidance, which allows for the following: clarity and confidence. You'll understand the why behind every move, helping you feel confident about your next steps forward. Tailored growth strategies. We align your finance structure with your long term goals, whether that's creating a portfolio, upgrading your own home, or improving your cash flow. A team based approach. By collaborating with accountants, buyer's agents, and our strategists, we help ensure all parts of your strategy work together smoothly. And future ready lending. So your loan isn't just set up for today, it's structured to help support future opportunities and keep you in control of that. With the right team and the right structure, growing your wealth doesn't have to be risky or confusing. It can be clear, strategic, and empowering. I hope that has allowed a little bit of insight of how we look at giving the best finance structuring solutions to our clients. I'll now hand back to Sean. So thanks very much.
Fantastic. Thanks, Simone. Thanks for all your insights, and thanks also to Danny and Keith. That was really great. Thank you. So obviously you've heard a lot there about how we go about building portfolios and strategizing. So let's look at some real examples. So the first case study we've got here is a client that came on board with Future Assist about 3 years ago, purchased their first investment property with us, and a big part of that strategy was around providing lots of tax deductions so they could continue to build their portfolio. So that first property created over $17,000 of tax refund for them in that first year. And what that enabled them to do was really improve their cash flows. So Danny talked a lot about the importance of budgeting and having confidence in your own cash flows. So those tax deductions really gave them that confidence to go on and purchase the second property. But also from a servicing point of view for loans. So Simone talked a lot about what's required to get finance for multiple properties. So that also assisted from a finance point of view, enabling to go on and purchase property number 2 and start to really build a property portfolio rather than being stuck at just the one investment property. So in our second case study here, we've got a client who is now actually onto their 5th investment property with us. So these are a real example of somebody who has been able to build a property portfolio. I think probably the biggest reason they've had success is because those first 4 properties they purchased, which you can see on the screen there, they built those over quite a long period of time. They first became a client in 2015. So at that time, property markets weren't booming in the way they perhaps have in the last couple of years. But what they were able to do is when they had the opportunity to make purchases, they did that. They got the finance in place, structured it in a way that allowed them to go on and buy the second one, the third one, and the fourth one. And then obviously what we've seen in the last few years is property prices really grow quickly, and they've been able to take full advantage of that because they had their portfolio in place, get some huge growth out of it, and actually achieve over $1.2 million worth of profit from those properties. And as I said, now on to property number 5, continuing to position themselves to build their portfolio further, ready for further growth in the markets. And the final case study we have here is a slightly different example. So this is a client who first joined us in 2018 and made their first property purchase. And again, you can see a picture of the property they bought there. And they've done very well out of this property. They still hold that property today, and you can see that it's gone up from 350,000 to 690,000 over those 7 years. So they've had a really good result. Obviously, through our review process, we did look at opportunities with them to invest again and build their portfolio. So we did that with them in 2019, 2020, and again in 2022. And in each of those times, they had potential to go again and to build that portfolio further. But like I said at the start, they, for their own reasons, had some sticking points, decided not to proceed with a strategy or a purchase at that point and stick with just that one investment property. Now we go forward a bit to late 2023. We had another look with them. At this point, they felt that their sticking points weren't there anymore. They felt comfortable about moving forward with another investment. But unfortunately, because of increases in interest rates, they actually weren't able to, from a servicing point of view for finance, to move ahead and actually make a purchase at that point. And so still find themselves in 2025 just with that one investment property. Now, of course, as I said, that property's done very well. It's cash flow positive as well, which is a good position to get to eventually. But it does mean that they're not receiving those tax benefits anymore that they were initially. And had they been able to build that portfolio further in those previous years, not only could they potentially have had much greater growth, possibly even $1 million worth of growth in their properties with that size portfolio, but they'd also be in a position now where they're getting those tax benefits and using that further to be able to help them build their portfolio as they go ahead. So once again, it just really highlights the importance of when you have the opportunity to build the portfolio, taking it, being ready to act, as Danny mentioned, and getting the guidance and support of the team to be able to do that. All right, well, look, that pretty much brings us to the end of the webinar this evening. So we haven't had any questions tonight, but as I say, we'll definitely be reaching out to everybody in the coming days by text, by email, and also by phone call. So if you do have some questions that come up, definitely please reach out to the person that contacts you, and we'll do our best to answer those questions for you. We'll also be sending out a copy of the webinar this evening. So apologies for a couple of technical issues that we had along the way tonight. So, but you'll be able to review it and take your time to go over the information that's been provided. And obviously what we'll be looking to do when we contact you, for those who do want to take those next steps and actually move forward with looking to build their portfolio and take the next step to the next purchase, we'll be offering, as usual, an obligation-free consultation with one of our strategists. Do a full eligibility assessment as well to see where you stand from a finance point of view, and yeah, hopefully take you on the next steps in your journey to building that property portfolio. So I think that wraps it up for this evening. So I'd like to thank everybody for joining us. Really appreciate everyone's attendance. Thank you very much. Also, a big thank you to Simone and Danny and Keith for your inputs for this evening. And for now, we'll say good night and thank you very much.
Thank you.
Thanks, Sean. Thanks, everybody. Have a good one.
Thank you.